So we begin this hour on Wall Street, where stocks, as you see right next to me, they're mixed. Traders are trying to plan around these changing tariff headlines. This morning, China raised its levies on U.S. goods to 125%. President Trump has tried to calm concerns about the market while pointing blame at other countries. Listen.
There'll be a transition cost and transition problems, but in the end, it's going to be a beautiful thing. We're doing again what we should have done many years ago. We let it get out of control, and we allowed some countries to get very big and very rich at our expense.
CBS News Money Watch correspondent Kelly O'Grady joins us now from the floor of the New York Stock Exchange with more on this. Kelly, good morning to you. So we're mixed out of the gate. Just help us understand what's happening this morning where you are.
Okay, so look, I think the mood here is a little bit anxious. We have seen this week, it's been a very wild week of trading. We saw some of the best days. We saw a lot of volatility. Of course, last Friday, we saw a really bad day for the markets. And so I think the way that you just sort of described it as mixed is accurate. I have been watching the Dow and the other major indexes. They have been up and down today. The thing that I want to highlight of what's been happening this morning and that I'm focused on is we are hearing from three of the major banks, JP Morgan, Wells Fargo, as well as Morgan Stanley. They all reported earnings. The past quarter to them looks good. The consumer is still holding up. Really, though, what I've been listening for on these question and answer sessions with the CEOs is their guidance. Two things I want to highlight for you there. JP Morgan CEO Jamie Dimon has had a little bit of a glum picture of the economy going forward because of the potential impact of these tariffs. He said on the call that he expects major public companies to cut their earnings guidance, cut their profit guidance, and that we're going to be in very much a wait and see perspective because businesses are just sort of holding off on planning because of all of this uncertainty. That word uncertainty, we're hearing it a lot. The other thing I want to highlight, Errol, kind of a little bit more dim picture. I actually just listened to BlackRock CEO Larry Fink, also reported earnings today. He said, this is according to him, we may already be in a recession and just not know it. So a lot of mixed feelings here today and just a lot of volatility in the trading, Errol.
Yeah, and as you've said so many times, and as we've reminded viewers, it's the uncertainty that investors don't like and that is not healthy for the economy. There's one other component I want you to help us understand, though, and that's I'm reading that a lot of investors are spooked by what's happening to U.S. bonds right now. The yields on them or the returns that you get for borrowing them are up. But why might that be a bad thing? U.S. Treasury bonds providing a bigger return?
Okay, so basically how this works is when you see yields on, let's say, the 10-year Treasury go up, that is government debt. If you're going to invest in a 10-year Treasury bond, you are buying government debt. And the yield is the interest rate that you receive every year on that bond for holding it. And so when yields go up, what that means is you need to incentivize investors to buy into that. They need a higher return in order to choose that versus putting their money somewhere else. They need to make it more attractive. Why this happens is a number of reasons. If inflation goes up, yields need to go up because you need to make sure that the return you are getting, let's say it's 4.5%, is higher than inflation. And if inflation goes up, that kind of squeezes the money that you are making by holding your money in that bond. And so why people are a little bit nervous about this is that when yields go up, it means that investors need more incentive because they think inflation is going to go up. They think that the economy is going to see some bumpy times ahead. And traditionally, U.S. bonds, U.S. Treasury bonds are a very safe place to put your money because you know that the government is going to pay their debts. You feel certain about the economy. And the fact that we have seen the bond market, I would say, have a little bit of a temper tantrum of late, Errol, is just an indication that investors don't feel as comfortable about the economy and where inflation is going in the U.S. at the current moment.
Yeah, and many other nations also hold U.S. bonds. So if they start to shed them and offload them, also not a good sign. Kelly O'Grady live on the New York Stock Exchange floor with all those updates. Thank you, Kelly. Now, as we mentioned, China raised its retaliatory tariffs on the United States up to 125%. CBS News foreign correspondent Coren explains that decision for us from Hong Kong.
China continues to be defiant in the face of even higher tariffs, describing US actions as a joke, while raising the level of its own tariffs to 125%, effectively ending trade between the world's two largest economies. It comes after President Trump again increased tariffs on China to 145%, which prompted this response from China's Commerce Ministry. In a statement, it said, "The successive imposition of excessively high tariffs on China by the US has become nothing more than a numbers game with no real economic significance." It went on to say it merely further exposes the US practice of weaponizing tariffs as a tool of bullying and coercion, turning itself into a joke. It comes as President Xi made his first public comments on the escalating trade war on Friday, saying his nation is not afraid, while meeting with Spanish Prime Minister Pedro Sanchez in Beijing. He said, quote, "There are no winners in a trade war, and going against the world will only lead to self-isolation." Well, President Xi is heading to Southeast Asia next week, where he will no doubt be shoring up trade relationships in Vietnam, Cambodia and Malaysia, and reminding the global South that China is open for business and a reliable partner. Well, China's Foreign Minister Wang Yi also weighed in on the economic decoupling, saying the US cannot act recklessly and the wheel of history cannot go backwards, end quote, in a trade war that threatens to upend global trade. Back to you.
All right, Anna, thank you for that. CBS News correspondent Natalie Brand joins us now for the White House with more on all of this. Good morning to you, Natalie. I know that when we spoke at 7 a.m. this morning, we had not yet heard a specific response from the White House to China raising its tariffs. Do we have any reaction by now, past 10 a.m.?
Yeah, hi, Errol. Good to be back with you. Well, the White House says that an official response to China's latest moves will be coming from the president himself, if it comes at all. We've been monitoring his social media, but I can tell you that Jamieson Greer, the U.S. trade representative, did speak to Fox News in an interview this morning. And when he was asked for his response to China's retaliatory tariffs on the U.S., he said it's not terribly surprising, but certainly unfortunate. We tried to then speak with Greer for ourselves. He wouldn't give us a comment with respect to China, but reporters pressed him on, are there any sort of talks or negotiations underway now between the United States and China? And he said, not at this point. We know President Trump has said that he is waiting for a call from China, from President Xi. And that he's open to negotiating. He says he wants to make a deal. He even says he has great respect for President Xi, but he still appears to be waiting for that call, Errol.
And separately, Natalie, we know that there's this 90-day pause on tariffs for every other nation in the world. And at the cabinet meeting with the president yesterday, we heard the administration basically say all these nations have now lined up and they have to figure out who to speak to first to schedule these things. But is there any tangible progress that the administration is reporting yet on these other trade deals with other nations now that this pause is in effect?
Yeah, and this morning the president did seem to comment on that on Truth Social, saying that his administration doing really well on tariff policy, saying things are moving along quickly. But yes, we've been pressing them on the details of these deals, which countries. Greer, in his earlier interview this morning, said that he's talking to Israel, Vietnam, said he would be speaking to Taiwan later today. We know that yesterday, economic advisor Kevin Hassett said that around 15 countries had come with explicit offers to the United States. Trade advisor Peter Navarro has also listed, India, Australia, the UK, EU, Japan, South Korea as places that will be coming in. But again, a flurry of negotiations when you think about the administration has just 3 months to try to make as many deals as possible. They've said that more than 70 countries have called them.
All right. Yeah, and that's why investors are so worried, because they've just kicked the can down the road. Natalie Brand with the latest at the White House. Thank you, Natalie. Have a great weekend.